which completed. And then we have our same anchor to new high extension long level here as we're going into our morning. Note that the extension long level has not broken. It has not failed. The bullish above line in the sand for that extension long level is the 67.4325. The question is this morning is whether the VIX will defend its long from lows. And that long from lows, this is exactly inverse. Again, it's a little bit easier to see on an hourly chart. Notice that we have not broken the extension short. It stretches from the previous lows of our traditional to the lows that we had on Friday. We squeezed into an extension short going into our Sunday night, Monday, and we have collapsed from that level. The line in the sand to the counter trend long from lows is a 2065. And so what would happen if we broke that 2065? The indices would make new highs. The indices profit targets are above are at 69.4325s. What happens if the VIX defends its 2065s? Then we're going to challenge those extensions. And it's probably the most important price to pay attention to is that 2065 on the VIX. And we were speculating about this in the pre-market, that the ES, it is historically a little bit less technical than the VIX inversely. And you can see this previous high that we had last week. It's potentially the right shoulder of a head and shoulders pattern. There's a gap fill up here. The VIX stick saves its line in the sand and we pierce our 61.8% line. We're still running into the right shoulder and then a gap fill. And then that brings into the conversation the gap fill statistics. Gap fill stats for Monday are 59% probability over the last 180 days. Notice it's not 76% like Tuesdays. It is not a high probability day over the last 180 days, especially when we're outside of the 20 handle. Outside of the 20 handle, there's only a 56% probability of filling the gap. Inside of the 20 handle, there's a 69% probability. So it becomes a much higher probability event. Notice where that 20 handle is. It's a 35.50. So we're talking about 59% probability below that level and then almost 70% above it. We're opening up right now. We're a little bit above the 30, but we're below the 20. And so, we're squeezing up into those levels. I'm sure you can see this. The overnight lows to highs is defending a counter trend long from lows. But as we go into our morning, the question is this, is that as we move forward and we fill that half gap fill, does the VIX defend its long from lows down here and keep us from trading up into those fills? Which there's a suggestion in our gap fill stats that we don't have to fill the full gap fill, that we could roll over from the half if the VIX defends above its 2065. So let's keep paying attention here. This is the bull flag. We are in an extension long level on the indices. And the question is whether we confirm it this week or not. And it is very clear here from the perspective of the VIX that if we break through those 2065s, then we're just going to rip on the indices right up into the 69.40s. And if those 2065s are defended, then something else is going on. That markets are pricing in a future where higher oil prices. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.